Okay, hello traders and welcome to live trading session today. It's Tunapan here, founder of Master the Markets Elite Trades Conference and the Traders Open Day. So today's topic is going to be on tops and bottoms. Okay, so let's take a look at that. Now let me just quickly share my screen over here, and then we can take a look at the charts together, and then we can go through today's topic. Okay, so there we are on the charts for today. So let's take a look now, for example, at GBP USD. You see over here, for example, we have our tops and bottoms quantified. Now, first of all, the thing is, what is a top and a bottom? As most of you know, even if you've not been trading the markets, or even if you've been trading it for many, many years, you would firstly know that the market never moves in a straight line. Is it not, traders? It never moves in a straight line. If it does not move in a straight line, it moves in cycles, therefore creating tops and bottoms. Okay, right. So that's the first thing. So those are the tops and bottoms that keeps recurring in the market. It's a recurring principle. Now, some of you may be asking then, okay, Thiru, that's all easy, right? We know that. But why should we quantify those tops and bottoms? What's the purpose of it? What's the importance of it? Some of you may be asking, okay? Right. So based on that, let me explain why it's important. You see, if you do not quantify your tops and bottoms like what we have done over here, whenever that bottom is confirmed, so if, for example, you had it confirmed here. See, let me just tell you, give you a little bit of background. Let's say something came down, and from that point, let me just redraw that again. So you see, for example, market came down, and then after that, it started bouncing up a little bit. At which point would you say that this is a bottom? Let's say, for example, we do a simple quantification saying that as long as it moved, let's say 50 points from the bottom, 50 points or 50 pips from the bottom, I would consider that as a bottom. Okay, let's say you just said that, or even if you just put even 100 pips, if it moves from the bottom, then I would consider that as a bottom. The same calculation that you have put here for the bottom quantification must be the same calculation for the top as well. Well, why is that important? So you see, anytime that it moves 50 pips from the bottom, let's say a 50 pips is over here, okay, in this example here. So let me just extend that up. I say the 50 pip mark is here. That means until and when this bar hits that 50 pip mark, I won't consider that a bottom according to my quantification. So let's say from this top, from this green bar, it comes back down a little bit. And after that, then it goes up a little bit, and then it keeps going, and then does an insider bar, and then finally then goes up and hits the 50 pip. You see, now that is the bar that hit the 50 pip mark and which confirms this bottom. So you can say, okay, that is that confirmation bar. And at that time, the arrow comes that signaling that that is the bottom. Now, how is that useful? Why is that useful? Some of you may be asking. Because once you got the confirmation bar, that's when you got your bottom confirmed. That can either be useful for entry, and that's when you would enter or buy into that position when the bottom is confirmed. And then you can use the opposite signal to exit the position as well when the same formula again is used to quantify the top. Well, if you did that to exit, that means basically dot to dot, of course, sometimes you might lose quite a bit of profits. So the really smart thing to do is to measure what the maximum distance it goes 80% of the time, 70% of the time, or in biggest runners, 20% of the time to design your different strategies. So if I find out that every time I get a signal, according to my quantification of my top or bottom, it moves 25 pips or 30 pips, then I can get my first strategy, 80% probability strategy at my profit target there. So that's why it's important to quantify the tops and bottoms to produce what we call your open equity tables. Okay, open equity needs 2 points, which is one is point of entry. Next one is maximum point reached. So once you quantify it, then I can see the maximum point is here. My point of entry is on this confirmation bar. How much does it travel? Maximum amount of times. That's why it's important to quantify. Now we move on to how can we use all of this in trading. As I mentioned a little bit before, first of all, it helps you in point of entry, where to enter once the bottom is confirmed. Next thing is where to exit based on my maximum point reached data. And you can do this for any time frame. So for example, here we have collected all the OE data over here and put it into a table like this. Can you see this over here? As you can see over here, I've then written down over 1,498 swings that we have calculated according to our smart money indicator, which has got its own formulas inbuilt taught to us by institutional quants on how these tops and bottoms are quantified. Based on that, then you can see that over here, 1,500, let's say 1,500 swings, tops and bottoms, 85% of them move more than 25 pips once I get a bottom confirmed or a top confirmed. Okay, so they at least move 25 pips. So I can design one strategy like that, 80% probability, very high probability, but on a very small reward. Another one that I can also design on the bigger runners to capture the bigger runners, 20% of the time it goes to 300 pips from the close. I can design another strategy on that. Based on that is how we design our strategies over here at Master the Markets. You can see in our elite room over here, we've designed over here a 70% strategy on a cash-in 4.0 over here once we get the dot confirmation. And you can see over here all the results as well over here. You can see over here from the top to the bottom since January, which we call all live. You can see there's been 6 trades, and after that, yes, some of the losses can be a bit huge. That sometimes the con of some of the strategies, the downside of some of the strategies, but overall it would be profitable. But you got a large, huge runners. You see, you got 6, 8 runners. Okay, it's high reliability, but very low reward. That's how usually it is, isn't it? You can't get everything. So here so far it's made 2.52% over this 3 months. But as I said, you don't know how the profits will come. So you can see also so far, another interesting thing to look at, it's about 60% reliability. It's not hitting its 75 to 80% reliability. What's the reason for that? Because we need to increase the number of trades. As we increase the number of trades, this will move more and more near to its reliability. Okay, so that's why you need to be patient. You need to keep taking the trades. It's just like a coin toss. You cannot get 50-50 just out of 5 coin tosses. You got to keep tossing the coin to get finally your probability getting to 50-50, and in the same way over here in this strategy, getting to 80-20. So how can I apply this in intraday as well? As I said, you can go on to the 1 hour and you can do the same thing once again. Let me hide this notification here. Once I've got that, so let me just go into the end over here. Let me push that down. Okay, there you go. So the same thing I can do over here. You see, because I've quantified the tops and bottoms over here, once I get a top signal, how much move is left. Once I get a top signal, how much move is left. I can do my 1 hour open equity tables as well. The one that I showed you just now, which was over here, this was more on the daily time frame. Okay, so that's how we can do it. Then we can correlate, we can do pattern recognition, we can do momentum correlation, and then we can then see finally how much open equity is left, so that every time I enter into a trade, I know how much move is left. Finally, I just want to leave you guys with this. Okay, so for example, if we take a look at, let's say, dollar Swiss at the moment, or let's see, okay, so let me just do this. Right, great. So if I were to draw a trend line here, okay, a trend line here, that's what people do. And some people might say, you know what, actually, I don't need these open equity tables, let me just do it just the way that I want to do it. So look over here. So some people might say, okay, once it crosses that trend line is when I want to enter. You see, no matter whether they have quantified their tops and bottoms, okay, regardless whether they've quantified the tops and bottoms or not, traders, in essence, wherever that you have put your entry on is how you are defining a top. And where you're going to get out is how you're defining a bottom. It's just that it's not been quantified to reproduce it systematically so that you can then scale it and reproduce it again and again and again. Look at what's happening here. Even if you didn't quantify that as a top, all you're saying is that once it crosses that trend line, that is your definition of a top happening, right? And then you're saying that, of course, every trader want to enter into a trade knowing that there is move left. You don't want to enter into a trade knowing that it's going to reverse against you immediately. Of course not. So there, no matter what you're doing, is your definition of a top. So you're saying that once it crosses that trend line, that is my top. And over here, you will keep riding it. Now, if tomorrow, if it goes against you, some people might get out of it because they are starting to feel in their own quantification, but they've not quantified it yet. It's not set into their consciousness. Is that they start thinking, okay, that's a bottom, so I'm going to get out. But if you knew for a fact that that is not a bottom according to your quantification, and after that, usually it will come back down, why would you get out of the trade? You want to ride it even more. This is the importance of quantification of tops and bottoms and knowing your open equity tables. So whichever way that you are doing, you must be able to know how to quantify your tops and bottoms, have your OE tables ready in whichever formula that you have designed. So far, what we have seen is that this is one of the best ways of quantifying tops and bottoms and how to know that one is better than the other. Let's say you have your own way. Let's say we have quantification 1 to quantify tops and bottoms, quantification 2, and let's say quantification 100. How do we know which one is better? Is by the way of putting the tables next to each other. So you see, I've done over here. You see, I've got one way of quantification here. Put the next way of quantification next to it and see if a large percentage of them are getting to the 200 pips or 300 pips. If your quantification, um, if your type of quantification can get 50% of them getting to 300 pips, then you have a better way of quantifying. That's how you systematically and quantitatively define that. All right. Okay, I guess that's pretty much enough for today. There's a lot of information. Using all of this, you can correlate and intraday trade live in the markets for today. Right, I guess that's that recap. We looked at what are tops and bottoms. Then we looked at why do them for your OE tables, of course. And the next, how to trade using them is what I've just shown you on how you can correlate it on shorter time frames and from higher time frames to shorter time frames as well, so that you know how much move is left every time you get into a trade. All right, traders, I guess that's pretty much that from me for now. And as we always say, till the next time, stay disciplined, follow your trading plan, and keep trading